Inflation is not a coincidence, it is a policy. Why inflation is a policy. In this graph, courtesy of JP Morgan, what we can see is that global core CPI forecasts have gone from a stabilization of inflation on the fourth quarter of 2023 to an acceleration both in the first quarter and the second quarter. What does this tell us? It tells us that the impossibility of reducing inflation with aggressive fiscal policy and a more than accommodative monetary policy is very evident. Why do governments create inflation? Governments issue currency. Deficit spending, government spending, is creating new money from nowhere, creating new money that when governments increase dramatically their expenditure and their size in the economy, they also are bloating the amount of money created out of thin air that goes to a private sector that is being wiped out of the economy. So you're being strangled by higher government spending, very simply because the currency that the government issues loses purchasing power, i.e. inflation is the reduction of the purchasing power of the currency that the government issues, and the more it issues above real demand from the productive sector, the worst. And obviously, inflation is accumulative. When we look at these figures, everybody hails the reduction in inflation, but inflation is obviously, as I said, accumulative. And what this means basically is yet another year of higher prices, which means that in the past 4 years, accumulated inflation will be above 20% going to 24. And this ultimately is a massive transfer of wealth from the productive sector, from families and business, from real wages and deposit savings to bloated governments and bureaucratic expenditures. That transfer of wealth ends up hurting the economy, and it worsens the situation for citizens. And inflation is the worst possible tax. The worst possible tax because it hurts disproportionately those that don't have the ability to invest, those that don't have properties, those that don't have debt, and it definitely weakens those that have a wage. In this graph, courtesy of JP Morgan, what we can see is precisely that, is why inflation is worsening. Government spending is accelerating in a year of enormous number of elections all over the world, and that increase in monetary expenditure and that increase in money supply is certainly perpetuating inflation, i.e. making you and I poorer. Let's go to the next graph. In this next graph, what we can see is that consumer confidence in the United States is plummeting. It is not just below the 2019 level, is that it's coming down in what the government calls a very strong economy. And it's coming down on a monthly basis and on a 3-month basis, to the point that the University of Michigan survey explains that it's worsening in all ages and all sectors. Why is consumer confidence so low in an allegedly strong economy? Number one, the economy is not that strong. The economy is bloated by deficit spending and government size in the economy, and by massive level of debt. Gross domestic income is significantly lower than gross domestic product, and that gross domestic product comes mostly from bloating the size of government in the economy. Number two, the unemployment rate may be low, 3.9%, but it is already at 1-year highs. And more importantly, the labor participation ratio and the unemployment to population ratio both remain below the 2019 level. Furthermore, real wage growth in a period of 4 years which has been a period of allegedly strong recovery way after the pandemic negative impact, in those 4 years, real wage growth has been less than 0.7% per annum. And all of that means that citizens feel badly about the economy because of another very significant element: debt. What citizens basically are doing is trying to make ends meet by taking more debt. Credit card debt has risen to well above the 1.2 trillion mark. Household debt has also risen dramatically. Citizens basically need to make ends meet by taking credit card debt, and that is exceedingly dangerous. That is why the so-called strong economy is not a strong economy. And inflation is a big part of that, because people are feeling that they are able to purchase less things at significantly higher prices for a longer period of time, despite all the strengths of the American economy. Let's look at another factor that tells us why inflation is persistent. In the next graph, what we can see is that money supply stopped coming down in March of 2023, and that it's risen, and it's actually bouncing to levels that are back to the levels of May 2023. So what this means is impossible to reduce inflation when government spending continues to be excessive, which means more money printing, i.e. reducing the purchasing power of the currency that the state issues. B, because money supply is rising, and at the same time, the economy is feeling much worse for citizens that need to take more debt. So overall, what we have is a policy that is inflationist. Inflationist policies are making citizens feel poorer, and they feel poorer because they are poorer. So we need to be very, very vigilant about the impact of the bounce in money supply, the persistent level of deficit spending, and the constant process of erosion of purchasing power of the currency, which impoverishes citizens and that creates this enormous transfer of wealth from the productive sector to the unproductive sector. Inflation is not a coincidence. Inflation is a policy.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.